What's going on, guys? Welcome back to another video. I'm your host, Cobra Trading, and today we are going to be talking about trading patterns. I get a lot of questions in my DMs on all different social media platforms about when am I going to start getting into more advanced trading theory, like into certain indicators. If you haven't watched any of my other previous tutorials, make sure that you go back and watch those first, because it's really important to understand the basics like support and resistance levels, how to draw trend lines, candlestick theory, and stuff like that before you can start getting into these more advanced concepts. So make sure that you have a good base of foundation, watch those videos first, and then come back to these. Originally, when I recorded this video, it was quite long, so I'm actually going to break it down into 3 different parts because there are 3 different kinds of patterns when you're trading. There are reversal patterns, which we're going to focus on today. There's also continuation patterns and bilateral patterns, which you normally see during sideways movement and a lot of chop, which you often hear me talk about when I do my analysis videos on Bitcoin and anything else. I'd like to give a special thanks to everybody that is a subscriber, everybody that follows me on my social medias. Thank you very much for the love and support. And if you are new here, make sure to smash that like and subscribe button so that you don't miss out on parts 2 and 3 of this video and any other tutorials that I have in the future. With all that said, let's go ahead and get right into the charts. How are we doing? Down in the bottom left of your screen here, and what you see now on your screen is the patterns that we're going to be talking about today. So we have a double top, a head and shoulders, and a rising wedge. So I'm going to go over these one by one. The first one that we have here is this double top. So obviously we hit a level of resistance twice here, right? So if this was a level of resistance, you just double tapped it. Okay, so we hit it once and we're watching this price action form. We found a base of support here, and then we continued up to double tap our resistance. So what happens now is we've got this resistance level, which I'll make dashed, and then we've got what's known as our neckline. Now, can you identify where the neckline in this pattern should be? If you said right here where we retraced and formed a small level of support, you're 100% correct. This is what's known as a neckline, okay? So what would end up happening in order to trade this correctly is you want to wait until you have a candle close below this neckline. So as soon as you get a candle close that's like here, this would be your entry, okay? So this is where you would enter. Now, where would you place your stop? Normally what I do in this instance for something like this is I set my stop loss somewhere in the middle here, okay? So I would basically just take this thing, split it in half in terms of the price action, and then that would be my stop. Where are you looking to take profit here? Normally you want to be looking to take profit when this pattern would be completing. Well, it would be completing when it's retraced a full 100% compared to this first leg up. Actually, let's make it a range, because you should always be making your take profits at different levels anyway. So you would be wanting to set ranges anywhere from there to the bottom of the pattern or beyond. Let's go ahead and move on to our head and shoulders pattern. So head and shoulders patterns are going to look pretty similar. However, they're going to have 3 different tops, okay? What that means is you're going to have 2 levels of resistance. This would be your first area of resistance, right? This was your first rejection. The price action came up, you rejected here, and then you hit a level of support. So you've got a support level that's about here. After that, the price finds support and comes up past its previous high. And this is where a lot of traders that are breakout traders, this is where a lot of breakout traders are going to enter, and this is where a lot of their stops are going to be. So this is why this is a really good pattern to be trading. This one I want to say has a little bit of a higher probability than the other ones. These normally end up playing out 60 to 70% of the time, even on digital assets. So normally once this price action starts forming, normally this is when you really want to be on the lookout in the price action to see if you're going to get a similar rejection about the same level as the first pivot point, because that's going to end up, pretty much saying that the pattern is going to be completing. Okay. So once that happens, this is pretty much where you're going to want to see a close below to be entering. So that's where your entry is going to be. Now, there's a lot of different ways to place your stop losses with this pattern as well. In general, you're going to want to do the same thing. You're going to want to place your stop about halfway up through here in this pattern, because if it does start coming back up, chances are it is going to tap this resistance level again. And if it does, it's probably going to end up breaking through and completely invalidate the pattern. Keep it simple here. Your stop loss is probably going to want to be about this area, okay? Because if it's starting to get creeping up close, real close up to this resistance level, then chances are the price action is going to blow right through that resistance level. The more times that a level of support or resistance is tested, the weaker that it gets. And now it was tested a third time and rejected. Normally, when a support or resistance line gets tested for a fourth time, normally that's when it ends up breaking, unless there is an extreme amount of either supply and demand at those support or resistance levels. This would be to enter into a short. So now you would want to be taking profits somewhere around here. Now, I know from the way that I drew these examples, I mean, it doesn't look like very much of a winning trade here. This is an example. Normally, these patterns are a lot larger than this, and I'll get into that in just a minute. We'll go look at some real life examples of these on the chart. So let's move on to the next pattern, this rising wedge. So what can you tell me about this rising wedge? Well, it looks like we're getting consistently higher highs and higher lows, and it's going to constrict the price action until it's getting really, really small up here, and the range is getting tighter and tighter and tighter. Sometimes the price can break down to about half of where the initial leg was. Sometimes it can go really deep. What you're going to want to do is you're going to probably already have these trend lines drawn, right? So this wedge is already gone. When it hit a bottom, a higher low the second time, that's probably when you will have initially drawn this trend line. Sometimes you'll see a throw over of one of these patterns, and then it'll come back into the trend lines like this. And this is still considered a rising wedge. Sometimes you'll even get one to the upside. You're going to want to enter as soon as this price action breaks below this trend line. So this right here, this is where your entry would be. When the price action gets here and you've got a confirmed candle close, this is where you would be entering. I personally like to set my stop above the top of the rising wedge. That's just what I do. I tend to get stopped out a lot less this way, and it just works a little better than, putting your stop here where, it could easily retest and come back into the wedge in case of, one of these throwovers. Okay. So you want to place your stop loss above the rising wedge. Remember, I said that you're normally going to want to be taking profit, and that these retrace about 50% of what the initial leg up was. Not very difficult. Obviously, there's no neckline with this. This is more based on trend lines. So again, if you haven't watched the trend lines video, make sure you go back and watch that so you can learn how to draw these things. And I go into detail about what to do, what not to do. Now we're going to be talking about the sisters or brothers of those same exact patterns, which is basically going to be just the exact inverse. So I went ahead and actually inverted my chart here just to save some time. If you're thinking, okay, well, wouldn't it be the exact same then, except the patterns are reversed now? You're actually 100% correct. It's pretty much as simple as that. So if you were going to be trading this, literally you would just be doing the opposite except going long, right? So as soon as this breaks resistance, you're trading the breakout and you're saying, oh, okay, so this is going to be my entry on that double bottom. Your stop's going to be the same thing, except the opposite. It's going to be halfway. It literally is the exact same thing. It's the same thing with this, just the exact opposite again. And, where's your entry going to be? You're going to enter upon this breakout, right? So this breakout, this is where you're going to want to enter. And then where's your stop going to be? About halfway down, or maybe a little looser, if you've got a higher risk tolerance. And then you've got your two take profit levels, right? So you've got one here, and then you've got another one for, a slight continuation or whatever. You've got another one up here or whatever. Same thing for rising wedges, right? So this is going to end up actually breaking upwards from here. So your entry would be upon the break. Your stop would be down here below the wedge. And then you've got your take profits. Let's say you're setting 2. So you want your first one up here where you first hit resistance. So this would be take profit 1, and then if you want, there's nothing that says you only have to have 2 take profits. You could set like a moonshot take profit, and put it way up here, whatever. Let's go ahead and just quickly look at some real life examples of these. Okay. All right. So can you guess what pattern that I'm identifying by looking at this set of price action? If you guessed head and shoulders, you're right. So this would be our left shoulder. This would be our head. And then this would be our right shoulder over here. Okay. Well, Scott, how come the neckline isn't completely flat? The neckline is never going to be completely flat like this. In fact, in this case, normally when you have a head and shoulders pattern like this, you're going to get some kind of an ascending trend line like this, where it just goes up through the price action from where the whole pattern began. Why isn't this the right shoulder? I ended up entering on the close of this candle. It immediately ended up coming out. It started losing momentum to the downside, and I got stopped out here. Wasn't a massive loss, but that's the way that it went. So what I did was I waited for a break. I redrew my trend lines correctly. I waited for a break of this, and I entered here. Okay, right there on the close of that white candle. And what did I do? I set my stop loss above these highs. I had my take profits down here. This was like my first one. And then I believe my second one was down here somewhere around like these candles, something like that. So that's an example of a head and shoulders pattern on a real life chart. I know that they aren't going to look perfect. They're never going to look perfect compared to what I drew for you. And that's just the way that it goes sometimes. All right. So can you guys pick out the rising wedge? All right. So if you guessed that it was here, then you were right. This is considered a rising wedge. Again, no, it's not perfect. But once you had this touch here, from that point, that's probably when you would have drawn your rising wedge trend line here. Okay, so that's when you would have identified that you're getting higher lows. I'm going to zoom in pretty close for this. This is why I said when I was drawing these that you always want to place your stop loss above the current rising wedge. This would have been your stop. My entry would have been here. My first take profit probably would have been around this level, around this support and resistance level in here, this micro support. And my second take profit would have been down here. So as you can see, once it broke down from here, if you would have kept your stop up here, or even, if your trend line was adjusted a little higher to get all these wicks in or whatever, you would have gotten stopped out right here. With your stop loss way up here, you wouldn't have gotten stopped out on that. And it actually would have been a pretty successful trade. Okay, so the last pattern is a double top pattern, okay? So this is what a double top looks like. Once the price action started revealing itself, you would have noticed that, hey, guess what? We just double tapped resistance up here. It's a known level of support and resistance as indicated back here to the left. You would have entered here on the bottom of this first big candle, and that's okay. You're not going to catch every major first move as soon as it happens. If everybody could do that, then we'd all be rich and, no one would have to trade. So this is where your stop would have been. You didn't get stopped out of that. Your first take profit level, honestly, probably would have been these wicks down here. And most people's second take profit probably would have been here unless they were looking way to the left back here. Smart money traders, they would have been putting their stop way back here at about 86.70 or so. So it would have been about, or 86.80, whatever it is. So that actually would have been down here, would have been your take profit too. Always look left for clues. I know that, I'm not cherry picking these or anything, but you need to make sure that you always look left for previous historic levels of support and resistance. Again, this harps on trend lines and support and resistance levels. Make sure you watch those videos, guys. It's very important. All right, guys, I really hope that you enjoyed the video today and that was helpful for you guys. Again, there is going to be a part 2 and part 3 of this. So next time we're going to be looking at continuation patterns, which is basically obviously just the opposite of a reversal pattern. Okay, so there's a little more involved with that, but it's pretty much the same thing. But You're gonna have to really practice identifying these patterns. Just don't go out just trying to find them. They will present themselves in time, and with practice, you will get better and better at identifying these patterns and being able to better trade them, okay? Make sure that you don't forget to smash the like and subscribe button if you're new here so that you can catch part 2 and 3 of the pattern trading tutorial series, as well as all of my other videos. So I hope that you all have a wonderful rest of your week. Happy trading.